Hi guys, this is Ray. So in this series of videos, we're going to be doing video walkthroughs of our swing trades from 2020, where I walk you through what my mindset was for getting into a particular trade and sort of get you guys to key in on how I see the markets. For starters, we'll start with a overview of the charts themselves. So at the very top here, we have the S&P 500, and then in purple here is the RS line, which is a little bit more visible here. In the middle, we have basically the stock setup that we use at TL, where it's the 10 DMA, the 21 DMA, the 23 EMA, 50 DMA, 65 EMA, and the 200. Ross really likes the 23 EMA and the 65 EMA as confluence to the 21 DMA and the 50 DMA. So you could go ahead and copy this chart setup if you like. And then at the bottom, we use blue for the up days and pink for the down days. So to get started here, with CELH, the video walkthrough, what we're going to be doing is walking you through basically the process itself on how the stock travels from one watch list to the next. Then I'll go over price and volume characteristics. And then the third thing is going to be the database characteristics through the money flow markets. So to get started here with CELH, one of the first things that came up on this was it made it to the HTF watchlist. The requirement for the HTF watchlist is a stock must move a minimum of 100% over 8 weeks. So if we look at CELH, it's at about $7.50 here, and then it moves to about 14. So about a move from $7 to $14, which is about 100% move from give or take mid-May all the way to mid-July, somewhere over here. One of the updates that we do is the HTF watchlist update, which is updated every weekend. And CELH made it to that watch list for that particular weekend. From that point on, the name is basically on my radar, and it just so happens in this particular case we get CELH gapping up on a earnings catalyst with a high closing range on the stock. So when names gap up on earnings, the key, or what the action you want to hone in on, is the closing range for that particular day. So in this case for CELH, the closing range was pretty much 100%, which shows you that there's a lot of institutional interest in the name, given the volume on that particular day, and the closing range was very high. So now at this point, CELH moved from the HTF watch list to the gappers watch list because we have a gap up in price, there's high volume, and there's a high closing range. From that point on, we're basically looking to stock the setup. We're stocking the setup to look for a potential entry area where we could define our risk. So CELH at this point, it was consolidating for the most part. It didn't do much. We had this high volume day come in. This was basically a short report. I just remember it because the name had been on the earnings gappers watch list the whole time. And on this particular day, there was fairly large movement with large volume. This was just a short report that came out. Basically an opinion piece. We don't pay much attention to these. So the name basically consolidates from August to all the way till its next earnings, where there wasn't much actionable right before the earnings were coming in. So from our point of view, when we're trying to position with the earnings so soon, you need ample cushion for you to hold through earnings. So in this case, CELH didn't have ample cushion here at this point, and the price basically consolidated from one earnings cycle to the next earnings cycle, building a fairly large base. Within this base, you want to see a few things here. So when the S&P was moving lower, as we see here, there were a few RS days where CELH is basically basing when the market is sort of pulling back and correcting. So this action here, this basing action, and this space is basically when the market is moving lower. So that shows you that there's some sort of institution or someone in the market that's supporting price as the S&P saw pressure. So that's one of the things that we look for. So when we're making our rest lists on these particular days where it's green and the market is down, the CELH would show up on the Gappers Watch RS list. So that from this point on, you know, the name is sort of trying to convince you that you might want to be positioning in me because I'm showing some sort of strength while the market is pulling back. So that's one thing we look for once a name makes it to the earnings gappers watch list. Well, we're sort of letting the name convince us to position in it. We're not convincing ourselves to position in the name. And I think that's very important to have that sort of mindset where you have to let the institutions show themselves on the charts like they did over here for you to have added conviction for you to position in that particular name. So to step back here again, we had 100% move in 8 weeks, and CELH makes it to the HTF watch list. From the HTF watch list, it then moves to the gappers list because it had a earnings gap up with a high closing range. After that point, we're stocking the chart for a potential entry point where we could place our risk. In this particular case, we saw RS days in this zone where the market, which is these bars, is moving down, and there was some sort of RS in this little space. So when the market's moving down and we're making our RS list, CELH would show up here. At that point, it's a candidate to position in. In this particular case, there was really, you know, tight action. It tried breaking out. We see the 2420, 2434 attempts, but it didn't really do anything until the next earnings cycle. By the time you position here, the cushion is not enough for retail traders to be holding through earnings. So after that, CELH again, it gaps up on big volume with a earnings catalyst. And basically at this point, we know that institutions were active in this area, accumulating shares while the market was pulling back. That's one piece of evidence that we have. The second piece of evidence that we have is it's the highest daily volume ever with a earnings catalyst. So this is a key institutional footprint on the charts that I think all of us should be looking for. So at this point, CELH would stay on the earnings gappers watch list, and this is where basically I wanted a position in the name because there were RS days in this zone, and the other reason being that the name saw institutional options flow activity from our money flow data. So if I flip back to this chart here, so basically what's happened here is this is the earnings report that we saw. This particular bar is the earnings, and post earnings we saw a large IOF come in. We call it IOF, institutional options flow. Depending on the membership level that you have, you might have access to this already. So this shows us that there's activity on the options market where CELH, there's institutional activity on the options market. So that's added conviction to try and position into this name post earnings, given that we already saw the highest daily volume ever with the earnings catalyst on this name. So now at this point, we know a few things. We know institutions, again, not to be repetitive, but institutions were active in this zone when we make our RS list. It's already been on the earnings gappers watch list here. We get the highest daily volume ever with the earnings catalyst. We have IOF markets being active. That's added conviction, sort of like building a thesis on why we should potentially try to position in this name. So once I saw the earnings flow come in, that is how I go about creating a swing trade plan for CELH. So at this point, I'm trying to define my risk in some sort of way. So it just so happens that there was this small zone here where the market was pulling in and not doing anything. And we saw a large outperformance day, or what we call a RS day on CELH. At this point, again, it would make our RS list while the market was pulling back. CELH was outperforming. So at this point, I'm watching for respect for this particular whole number being the 30 mark. I'm fairly big on when markets see turbulence, you want to have whole numbers for particular names, so that you could track them easier. So in this particular case, you know that the nearest whole number was it's respecting 30. So at this point, when the names are respecting 30, that's basically the area I'm trying to position versus that 30 mark. If I can position versus that 30 mark and place my risk there, and build my full position, you know, somewhere around near the 30 mark, that's the ideal scenario. So in this case, it just so happens I positioned at about 30.34. And then volume comes in once the pressure's released on the markets here. CELH, which was holding up well versus that 30 mark, is now outperforming the markets here. It's been a fairly cooperative market, so this one just, you know, it has a lot of characteristics that we look for. With the highest daily volume ever with earnings catalyst, it had IOF markets, which basically put a timer on a stock to make some sort of directional movement, and it's added conviction. And then we saw also follow through volume over here, right after earnings. So there's a lot of positioning, institutional positioning in the name from a data point of view. There's a lot of obvious volume, institutional volume on the charts as well, which all plays into conviction. Then we see RS days show up while the market's pulling back here again. And then we try to position in the name versus a whole number level at 30. The other question that we get often is why 30, and how do I go about choosing 30? So there's a little bit of data behind why we choose 30 as well. We don't plan on discussing that particular data on how we arrive at that particular number, but there's also science behind why we end up choosing 30 in this particular case, and gives us a really good risk to reward ratio to position in the name and then see if we could get this sort of movement. So this year the market's been very cooperative, so we see this movement pretty often in many names, but that's not always the case, and shouldn't be the expectation where you initiate at 30, which is basically happens to be the bottom on this particular swing trade plan, and then it moves up to $70, a easy 100%. So the other thing I want to take note from a price volume perspective here is you note that as price is consolidating, volume on the name dries up. That's one thing you want to spot. So when there's tight consolidation, this is indicative of the stock being closely held, and it's constructive. So constructive tight areas will always have a dry up in volume. And it just happens that this instance CELH also has this going for it. So at this point, maybe, some people say you could have positioned in this name over here as well, or add it to your position. Yes, that is one way to go about it. I mostly position all at once based on, that there's some sort of science behind that we have going with this 30 as well. We have the IOF, again, just to be repetitive. We have IOF, highest volume ever with earnings catalyst, follow-on, follow-through volume after earnings, and it's showing RS days. So that's basically the setup. And that resulted in this particular move. So we'll end it there. The next video is going to be on SQ, as many of you have requested. Please reach out. Let me know what your thoughts are, how I did with this walkthrough, and hopefully I'll get better and better at this throughout as 2021 goes on.